Hi, I'm Andy from Ninox Corporation. In this training video, we're going to learn how to use our chart of accounts to track and summarize all of the transactions that we run through our business. Now, it doesn't matter if you are using a simple general ledger or you're using detail ledgers. For example, we have inventory transactions. We have sales transactions like invoices and credit memos. We have payroll transactions, even accounts payable, billings, and purchase order. Whether you are using these detail modules or you're just using a simple general ledger, it's important to have one place where we can consolidate all of the financial transactions representing all of the financial activity in our business. And that one place is the general journal. Now here we see in our ERP system, we can go into our accounting module, and here we see all of our journal entries. We can see all transactions, including invoices, bill payments, credit memos, payroll, inventory, cash receipts, and disbursements. Now every transaction is going to have a few key pieces of information. If you are using the subjournals, like the inventory, the sales journal, payables, payroll, and cash management journals, then you'll want to post those transactions directly from within those journals. If, however, you're posting directly into the general journal without the detail, then you can go in and indicate the type of transaction by using these tags up top, or you can just do direct entry of adjusting journal entries. And this is common when you're closing out the month, closing out a quarter, or maybe closing out a year and getting ready to run your financials. The key aspect, the key element to being able to use the chart of accounts to produce our financials, our trial balance, and our journals is in our ability to distribute the transactions appropriately to the debit accounts and the credit accounts. Now remember the number one rule in accounting: debits must equal credits. We must balance the books, as it were. Now, if you're using any of the detailed journals, for example, maybe we have an accounts receivable sales invoice. So we have this financial transaction of $562.50. Now, if you are posting from this detailed journal, this is our accounts receivable invoicing journal, if you want to post, we just go to the posting icon and elect to post and view the transaction. The system will create the journal entry as we see here, and then as soon as everything has been properly distributed, we'll see the transaction just like this. And here we see all of the debits and credits for all of the different components of this $562.50 customer sales invoice transaction. You'll note the journal entry is coded OE for order entry, 2312 is the year and the month, and then the transaction number as it would be tracked in our general journal. We see all the debits and credits to our balance sheet and P&L accounts for revenue, for cost of goods sold, for discounts, but the most important thing we see is that our debits equal our credits. If we are going to do direct entry, which we would see here, and we'll add a new transaction. I'm going to direct enter an adjusting journal entry. Let's say this is going to be a $50 transaction, and this is a credit memo. I could optionally code it to my credit memo journal if I wanted. The date is automatic. Here we see our prefix CM for credit memo. If this had been an adjusting journal entry, we'd see the JE prefix. Remember our OE prefix for order entry. We're going to do a credit memo, so we have the CM prefix. 2023 is the year, 12 December is the month, transaction number 8. By selecting these defaults and clicking the distribute button, the system will automatically create the debits and credits for us. So if we want to auto distribute, we select our accounts and click distribute. If we want to manually distribute, we can use the plus sign here, one click to add a new record. Here I will select the account. And again, this was going to be the debit is going to be to sales discount of $50, and that's a debit. And this is going to be a credit memo for customer sale. And I'm going to go ahead and copy that. And then add the other side of the transaction. Now you'll note it's crucially important if you want to have accurate financial statements when you are setting up your general ledger or when you're entering transactions from any of your detail ledgers. Debits must equal credits. This red X is telling me that my books are currently out of balance. I'll correct that by adding the other side, the credit side of the transaction, to accounts receivable trade for $50. There's the credit. I'll repeat the memo, and the green check tells me that my $50 in debits is equal and balanced with my $50 in credits. But here, these are the individual transactions. This is a $50 debit transaction that I want to appear, or I want to roll up or summarize in my 4340 sales discount account. This is a transaction account. It's normally a credit balance, but because we are reducing the amount of the sale, I have it set up as a contra account. You can learn more about contra accounts in our chart of account setup training class. And we know from setting up our account that this transactional account will roll up to the gross income account, and gross income will eventually roll up to the grand total net income account. The key to this is having one location, in this case, our general journal, where we can keep track of all of our inventory purchases and our sales invoices, our vendor bills, debit and credit memos, our payroll transactions, our cash receipts and disbursements. One location that allows us to track all of the debits and all of the credits, and note here, always want those in balance. So here we have our trial balance, and when I look at the trial, I can see that my books are balanced. So now when I go to run my financials, now these transactions haven't been posted yet, so they won't show up on the financials, but eventually I'll be able to go into reports, go into my accounting reports, and go to my balance sheet and my statement of profit and loss, or I can go directly to the chart of accounts and actually see all of those transactions summarized, all of those debits and credits summarized here in the appropriate accounts, rolled up to my totals, and then rolled up to my grand totals. So whether you are building your own accounting system or using the Ninox ERP system, remember to use your general journal here and either do direct journal entry by clicking on the Add New button, or using detail or subledgers and entering your customer sales, your inventory transactions, your payroll transactions, time cards, payables, purchasing, cash transactions, and even your project management and job cost transactions. We'll cover those in a different class. Once everything has been posted to your general journal, we then can go in to System Utilities. We can select Period Close. We can indicate the year, in this case 2023, the month of December. We type in our close month security key, which right now I just have set to close month, and with the click of a button, all of our transactions will be closed, all of the period will be closed, our general journal and all of our detailed journals will be updated, and we can now run monthly, quarterly, semi-annual, periodic, or annual financial statements. In our next video, we're going to look at how we can use our chart of accounts to track periodic balances, monthly, quarterly, semi-annual balances, on an account by account basis or rolled up in total summary or grand total summary. We'll see you in that video. Thanks very much.